Hello folks, this is Tom Hall. The video this week will be recorded from Greece, where Liz and I are on our anniversary. At the moment I'm standing at the feet of the Parthenon, which is a building that I've wanted to see my entire life. We've had an amazing time, and we'll follow this with a brief review of the current markets. Hello folks, I'm recording near the site of the ancient Agora in Athens, in the shadow of the Acropolis, where Plato, Socrates, and Aristotle spoke over 2,000 years ago. In this month's video, I'll discuss some of the major headlines that influenced markets in September. I will also provide insight as to what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. We just completed the third quarter of 2018 and are now entering the year's final stretch. Between July and September, the S&P, Dow, and NASDAQ all gained at least 7%. In fact, the S&P 500 had its best quarter since 2013. However, last month's performance contributed little to those strong gains. Historically, September isn't a particularly strong month for stocks. In the past 20 years, the S&P has averaged a 0.8% loss in September. The major domestic indexes continued this trend last month, posting mixed returns. The NASDAQ lost 0.8%, the S&P 500 gained 0.4%, and the Dow grew by 1.9%. This somewhat tepid performance came despite both the S&P 500 and the Dow hitting new records during the month. As has been the case throughout 2018, trade continued to be a hot topic in September. The US and China imposed more tariffs on each other's imports. However, Mexico and China agreed to a new trade accord that would replace the North American Free Trade Agreement. These geopolitical developments generated major headlines, but they weren't the main drivers for the recent stock performance. Instead, investors focused on the fundamentals. September's news gave us a lot to think about, from housing to retail and more. Recent data indicates that the housing market may be slowing. As prices increase and inventories stay low, many buyers can no longer afford to purchase homes. The challenge is especially acute in large cities, which could drive some people to relocate. Reports also indicate that retail sales remain relatively flat. However, the pace may pick up again. Tax cuts and a strong labor market mean consumers have more money to spend. In fact, consumers are feeling very good about the economy. Their final result for September's Consumer Sentiment Index was above 100 for only the third time ever. In addition, consumers' expectations for their personal finances to improve reached the highest level since 2014. Against this backdrop, Federal Reserve Chairman Jerome Powell said that the economy is strong, and he noted that the inflation is close to the Fed's 2% goal and the labor market is providing the jobs that people need. Going into October, we have a lot to keep an eye on. From Italy's financial concerns to the upcoming corporate earnings season, both domestic and global data will be on our radar. Just as stocks often drop in September, October can bring volatility, and the fourth quarter is often strong. Of course, past performance is no promise of future results, so our goal will be to analyze current circumstances and find opportunities for clients to position themselves for the future. That's it for this month's Educational Economic Update. Once again, this is Tom Hall with Tom K. Hall Financial Group, signing off for the month of October 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, give us a call at 801-316-4110. We'd be happy to talk to you.
Required disclosure. While we believe that the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in the periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.